The Fed tried to ignore it, but they finally admitted that interest rates would have to rise at some point. You came here for the truth, so let me unveil that for you. Today we are going to look at what has happened after the Federal Reserve's meeting. Number one, we're going to discuss the Fed. Then I want to look at what's happening with interest rates. Interest rates are so key, not just to what happens inside of the United States, but that affects the whole world. And I will give you updates on all the central banks and what they've been doing. And then, of course, we need to talk about debt. There's personal debt, there's corporate debt, there's national debt. This goes all over, and we need to touch on that today. So let's begin. Everybody has been waiting for this day to come, and now it has passed. I'm bringing you all the details that you need to know. I sat through about half of the conference, and my goodness, it was excruciating. It was horrible, okay? They were asking the exact same question, every single reporter, over and over again. I mean, come on. And he would pull up his paper and he would read the exact same lines. I mean, people, stop asking the same questions unless the goal is to waste time. Fed sees 2 rate hikes by the end of 2023, inches toward a taper. Now, this is the headline here. This is the headline you're going to see everywhere, in fact. But if you look at what happened, so first they have their statement that comes out at 2 p.m. and 2:30. You have the conference where the reporters are actually able to ask questions, and it's a little bit more off the cuff, even though, as I mentioned, he always reads off the paper. This right here, he specifically said, the dot plot, which I'll show you in a minute, don't take that, let's just take it with a grain of salt, is literally what he said. So basically, that means nothing. But still, that's what they're picking up here. I'm sure that this is going to seem in the next day, probably by the time you're watching this video, the markets have completely forgotten about it. I want to talk more about that in the Money GPS Insights today, so definitely stay tuned. 13 of 18 officials see at least one rate hike in 2023. Powell says the Fed will begin discussing scaling back bond buying. So at the next meeting, that's when the discussions will begin. Okay, more about that in a minute. This right here is the official FOMC statement, and I just wanted to make it clear that interest rates are staying where they are, basically rock bottom, and you will have a continuation of the $120 billion a month for the bond buying, the mortgage-backed securities. That is going to stay where it is. So in that respect, it's business as usual. The Federal Reserve is continuously doing the reverse repo operations. That was brought up by one of the reporters with their questions. And he said, as you've seen before, I've quoted, this is working as it should. It's working as normal. There's nothing to worry about here. And what he talked about was that we are effectively, manipulating the markets in this way. So this facility is there to be a Band-Aid or a bandage to fix that up. This is the latest. You could see maturity date June 17th, and that is $520 billion. So there's still a lot of need for this particular facility and the madness that it creates that they are unwilling to admit. This is the Fed funds rate. Just wanted to show you here. We are at rock bottom. This is unprecedented, but now it's just normal. That's the funny thing. If something goes on long enough, it just somehow becomes normal. And you could see over these periods, if I pull out the highlighter, where we have 5 and a bit, maybe what was it, 5.25% maybe, and then you have approximately 2.5%. Look, we are at rock bottom, and essentially, other than this blip, this period of time, we've been there since 2009. How in the world are they ever going to turn this around? I mean, it's nothing but nonsense when they talk about this. This is the Federal Reserve's balance sheet. It continuously increases, and there are some, weeks that go by where it actually does decline, but you see the general trend there, of course, and it's at $7.95 trillion. We'll be at 8 trillion soon. And the Federal Reserve is no different than the other central banks because you've got the Bank of Japan and you've got the ECB, and they're just pumping in money left, right, and center. This is the dot plot. Okay, so all of the members here, the participants as they call them, they like to put this where they think that this is going to be, the interest rates are going to be at these particular dates, 2021, 22, 23, and then what they have is longer run. Okay, so this is what they really focused on. By the way, this document here is directly from the Federal Reserve's website. Whenever I give you statistics, I'm always pulling it directly from the Fed website, from the BLS website. I'm getting the source directly, or I use something like tradingeconomics.com, which pulls that data from those different sources. So this is from the federalreserve.gov website. And by the way, every single alternative news, if they do not, and the mainstream, if they are not showing you the source, demand it. Demand the source every time, okay? We need to keep up with that. This is 2022, and you could see right here that there is the expectation that perhaps could it be an increase 2023 and then longer run. And essentially where we're at right now is, for the purposes of this video, it's 0%. And some individuals believe that this will start to increase, as you can see, getting to a point of approximately 2.5% in the longer run. But if you note on the previous chart of the Fed funds rate, they could never get back to where they were before. So you could scroll through here and see the different graphs, charts, everything that they have all in here, unemployment numbers and everything that they're kind of looking at right now, at least what they tell you. So if you are interested in that, as always, the link will be in the description below. This also came out. I didn't see too many talking about this, but it's Federal Reserve announces, by the way, again, this is a press release from the Fed website. Federal Reserve announces the extension of its temporary it's temporary, straight face here, US dollar liquidity swap lines with 9 central banks through December 31st, 2021. So all the way through the end of the year, you're going to have these swap lines that are going to, facilitate the business as usual and so on. That's the Bank of Australia, Brazil, Korea, Mexico, Singapore, Sweden, Denmark, Norway, and New Zealand. Okay, so that's what's happening here. I think it's important to see what all the actions that they're taking and not just focus on one or two. But this is the point I want to make before we get to the GPS insights. Okay. Quote, this is not what the market expected. The Fed is now signaling that rates will need to rise sooner and faster, with their forecast suggesting 2 hikes in 2023. This change in stance jars a little with the Fed's recent claims about the recent spike in inflation is temporary. Okay, they're talking about temporary, they're talking about transitory, and yet they're saying that they have to increase rates. But what Jerome Powell specifically said, try to calm the markets down, didn't work. But regardless, what he said was essentially, we're not going to change anything. Everything is staying put. We're not going to do that. In fact, he specifically mentioned rates would stay rock bottom, and we're going to start to discuss the beginning of when in the future. So he's putting all these different caveats in here. When in the future we would begin a taper. So they're going to do taper first on the amount of money that they're printing. So instead of 120, maybe it's 110, maybe then it'll be 100 and so on, okay? And so they're still pumping in the money, but just less of it. It's kind of like what they did in, as you saw, 2018, central banks around the world started to reduce. But anyway, this right here just gives you some insight as to what they're saying and then the actions that have been taken. The markets themselves, I mean, I'm looking over here on this screen, the S&P 500 ended off a little bit down. I mean, the markets didn't really know how to respond to it initially. But the funny thing is, the dollar stayed pretty much flat in this given day. So let's get into everyone's favorite part of the show, the Money GPS insights. Number one, the Fed talked about increasing rates. It was mentioned, finally it was mentioned, but they put a lot in front of that to make sure that the markets stay put. Number two, it didn't really help the markets though. They weren't happy. If you look at what investors are talking about today, they're saying, hey, maybe they aren't so, let's say, confident about inflation, and really this is all just a show. We'll see in the coming days, but certainly that's the initial reaction. Number three, listen, this is the key right here, okay? There will be no changes for the next couple months. No changes from the Federal Reserve. No increase in rates. No change in their balance sheet. The swap lines are still there. And all of the reverse repo operations are still happening. All of those components are still in place. So you must understand that as far as the Fed is concerned, there's not going to be any change. So you don't need to worry. Investors can still keep the risk on mentality, essentially. CNBC put out this article, and I thought it was interesting because of the way that they talked about this. And I think it's more of a promotion than anything else. Here are some money moves to make while the Fed keeps rates near zero. The low interest rate environment may not last. Here are some ways to make money now. Number one, they talked about essentially tips for borrowers. Lock in your interest rate. And I do agree with that. If you are on a variable mortgage rate, I think that should definitely be changed. That's my personal opinion. If you could lock that in right now, they're saying here below 3%. The money is very cheap today. If you're going to be able to lock that out for the duration of your mortgage, that's fantastic. In places like Canada, you cannot do that generally. So I would definitely take advantage of that. And they just talk about the interest rates and so on, getting good credit lines, locking them in cheap while you can, of course, and then advice for savers. Just saying, your typical account doesn't pay anything. You shouldn't keep your money there. They say, hey, why not take a little bit more risk and invest in the stock market? Well, anyway, I wanted to show you some other facts too, because you look at the unemployment rate, which is something that all of these different investors, investment companies, analysts, and so on, they look at this unemployment rate. You and I, we know it's not real. We know that this is not the real unemployment rate. They measure this as the U3 unemployment rate provided by the Bureau of Labor Statistics, and it's 5.8%. And I just want to show you the trend, declining over a period of time. That's the data they are looking at. So when we look at our data, we know it's real, but we also have to understand what they're looking at, because that's going to affect things on their side of the spectrum as well. I don't have time to get into this, but you need to know it. With moratoriums ending, more than 8 million households face foreclosure or eviction. Please look into this. I was going to do an entire video about it, but the Fed took precedence, of course, because that's on everybody's mind. This is so huge. I mean, I don't know. They could extend it and so on, but how long could that be done for? All right. I need to talk about this as well. You always see the Federal Reserve, no matter where you look. I mean, you could see places in Europe, for instance. What the Fed is doing might be front page news, even more so than what the ECB is doing sometimes. Same situation, Canada, Australia, and so on. But look, total rate actions from 84 central banks in 2021. Look, they've already been hiking. Other central banks have already started that. Okay, it's not like we had seen previously in the previous cycle where there was hundreds of rate hikes in that period of time, where 2018 was getting all wacky and things were really changing. No, but it certainly has begun, as you can see. This right here shows you the global inflation comparison. And you could look down this list, and I wanted to bring this to you. I don't have time to, of course, cover everything, but you're just seeing the different countries on the left-hand side. US, Japan, Europe, Canada, UK, you go through and it essentially just shows you the CPI, the core CPI, the PMIs, PPIs, all these different measures of inflation, and of course, house prices year over year. And, just to give you an idea of the rank, Japan is ranked number 1. The US ranked number 39 because the year over year house prices, for instance, 12% going up year over year. That's unbelievable. People simply cannot survive. But fake statistics, right? They show you personal income. It's been rising. You don't have to worry. Personal income has been rising. Things are doing great, right? Well, thanks to Real Investment Advice, they actually separated this. Look at personal income, that orange line. That's the information that the media is telling you. But at the Money GPS, I'm only here to bring you the truth. I'm not going to sugarcoat it, okay? You actually take the amount of money that the government has been stuffing in and you subtract it from that actual personal income as they measure it, and you get the organic personal income. That's the blue line, and it's down. It's down. And we talked about this countless times before. The Department of Education just approved $500 million for student debt relief for 18,000 borrowers. Is this the future? Is this what's going to happen? Do you think, I want to know in the comment section, do you think they're going to wipe out the student debt? Is that really going to happen? Is that going to get passed? Let me know in the comments section. Look, I need to get in touch with you. I've been emailing people every single day. 5 days a week, I'm going to send you my video. All you got to do is get on the Insiders. The Insiders is my way of connecting to you directly because this system that we are on right now, can't trust it. I'm going away from it as soon as possible in this way. Okay, so I'm going to set up the Insiders so that I don't have to rely on their systems to notify you when a video comes in, because I hear every single day from people it's not notifying you. I get it. So that's why we got to do this. Get on the Insiders. There's no garbage in there. It's the video 5 times a week. It gets directly to your inbox, okay? You can also contact me directly through that. Later, there's going to be original content around it. I'm planning that in the coming months where I can actually give you good information through that as well, okay? That's going to be real key, okay? And if you found the video informative, hit that thumbs up button, okay? When you do, you support the channel. It's easy as that. If you haven't seen this video already, you definitely want to check it out. Click it and I'll see you there.